welcome. This is Earnings Edge. I am Agam Vakil, and we are now in conversation with the management of Punjab National Bank, Mr. Atul Kumar Goel. He's the MD and CEO of PNB. It's been a very strong quarter for Punjab National Bank. We've seen a 10% growth in its net interest income. We have seen profits grow manifold, but perhaps the more important factor playing out as far as this quarter is concerned, the coming off of the net NPA and the gross NPA ratios, which does mean that asset quality has also improved further. Mr. Goel, good morning. Thank you so much for taking the time out. I want your assessment on the quarter gone by, and can the first quarter be a base on which Punjab National Bank can build on as far as its upcoming financial year is concerned?
Yeah, very good morning, Mr. Agam. Definitely, the first quarter was very, very well as compared to the last year also. And this is the beginning. This is the beginning, and the rest of the quarter will also be on the same line. Because this is on account of the last 2 years, we have done a lot of things on the how to improve the underwriting standard, collection efficiency, digital transformation, as well as the HR transformation. This is the result of the outcome of each and every step we have taken in the last 2 years.
All right, sir. So in that case, can you take us through the guidance that you have when it comes to credit and deposit coming in as far as this FY25 is concerned, and what are the factors that you are considering behind that growth that you're expecting?
As far as credit growth is concerned, we have given the guidance of the 11 to 12%, and we are maintaining that also. If you see the first quarter, the YoY growth on the credit was more than 12%, 12.20. Similarly, we are giving the guidance for the deposit between 9 to 10%, and your specific question regarding from where the credit will come. Basically, the focus area for the Punjab National Bank is the RAM. If you see the first quarter, the ratio of the RAM has increased from the 15.16 in the last quarter to 15.46%. And we want to improve this ratio to 16% in the times of 3 to 4 years and 56% for the current financial year. So this is the focus area, but because we are the one of the largest bank of the country, so we are also in the corporate financing, and as far as corporate is concerned, there is a good demand from the steel sector, road sector, as well as the cement industry also. But infra, there is a lot of demand because that is the priority of the government also. They have kept the 11.11 trillion budget for the infrastructure, and there is also a good demand from the NBFC sector.
Right, so your gross NPA and your net NPA ratios have also come off sequentially, and you're actually guiding that there could be a further decline in these ratios. So, of course, that means good news. So, can you tell us about the factors that you think which will lead to further decline in these ratios going ahead as well?
There is a 2-3 point. First, I will give the guidance also. We have given the guidance for the gross NPA 5%. Since we have already achieved 4.98% in the first quarter itself, so we are revising our guidelines less than 4% by the end of the March 25. Similarly, the credit cost also, we have given the guidelines earlier, it is 1% because first quarter it is 0.33. So now we are revising guidance for the credit cost, it will be 0.50%. The reason of the 2-3 things which I want to convey to all of you. First, the recovery is more than the double. Last year it was more than double also. So recovery is more than double, and slippage is the least slippage in the last quarter, 1,750 crore rupees, and 95% more than the PCR. So aging requirement is also less. Aging requirement has become drastically reduced, and recovery is more than the slippage. Even the time will come, we will see the reversal for the credit cost also. But whatever guidance I am giving 0.50, it is also very conservative.
All right. So also want to understand your point of view with respect to the current interest rate regime in general. Of course, the Reserve Bank of India has not indicated whether or not they are looking to change interest rates. But considering the current, regime at the moment, so what sort of trajectory do you have in mind when it comes to interest rates in the public sector space?
In my opinion, if you see the deposit rate, I think deposit rate has already reached on the peak also. But since there is a gap between the credit growth as well as the deposit growth, so sometimes there is a spike in the bulk deposit. As far as retail deposit is concerned, there is no need to increase immediately the interest rate also. But your specific question regarding the interest rate view, earlier we were thinking there will be a rate cut in the times to come also, but considering the inflation number we have seen in the last month also, so I am of the view that it will take some time also, maybe the 5 to 6 months for the rate cut also. We were expecting this earlier also.
So a question on your net interest margins as well, because you've seen an improvement here. My question is, can we expect Punjab National Bank to maintain these margins going forward, or do you think that there could be a little bit of temperance, a little bit of moderation in FY25?
As far as moderation is concerned, there should be around 2 to 3 basis points. But guidance we have given for the NII is the 2.9 to 3%. So we are giving the same guidance that our NIM will be within the range of the 2.9 to 3. As far as if you see the number also, the first quarter, the domestic NIM was 3.21 and the global NIM was the 3.07. So maybe 1, 2, 3 basis point maybe here there, but we are confident whatever the guidance we are giving, we will be in a position to remain in the guidance also.
Mr. Goel, a final question then. Any challenges that you envisage for this upcoming financial year? What are the areas at which PNB still needs to work, or rather has its objectives sorted in terms of its plans?
We have, as I told you earlier also, we have taken a lot of steps in the last year, because digital transformation we have already completed. Last 2 years, more than 100 products, service and the processes we have revised, and we have taken a lot of steps on the HR transformation also. But definitely there is a pressure on the deposit side little bit, there is a pressure on the to maintain the name. But as far as the deposit side is concerned, because we are having the 10,000 branches, and we are having the 20 crore around customers, so there is not a much challenge for the Punjab National Bank on the deposit front, because last year also we have opened the more than 2 crore account, and the first quarter also we have opened around 27 lakh account. So money will flow in this account, but definitely on account of this gap between the credit as well as the deposit growth, so there is some challenges in the deposit growth also. So I do not find any other much challenges, and we are on the right track.
Okay, so a good quarter and on the right track. That is what the management of Punjab National Bank is indicating. Mr. Goel, thank you for joining us and taking us through the quarter as well as what we can expect going forward. And thank you for talking to us here on NDTV Profit.